What are some short-term strategies that you can use to kind of navigate this? And here's some things that you can do or kind of focus on. Hey everyone, welcome back to the Flex Free Game channel. Today we're going to be diving into the biggest market news of the day. Stocks are down after a hotter than expected inflation report, but more importantly, we're going to be breaking down what that means for investors like you. Best strategies for you to go ahead and navigate this short-term volatility. So if you're wondering whether to buy, sell, hold, stick around, we're going to have what you need and we got you covered for today. Also, before I jump into everything today, I want to make sure if you are looking for some coaching or looking for some strategies that are going to help you to be successful no matter what the market is throwing at you, make sure you check out the link below this video after you're done and go ahead and set up a call. We can go ahead and help you out. So let's go ahead and get into it. The Consumer Price Index, or the CPI, rose 0.5% on a monthly basis and 3% year over year. So excluding food and energy prices, in January, 0.4%, which the forecast was 0.3% for a monthly increase, and the annual core inflation rose 3.3 versus expectations of 3.1. So basically, across the board, inflation was higher in January than we thought, whether it was monthly or year over year. And we were kind of expecting some cooling. We've continued to see a kind of cool month over month. There's been a few blips here and there, which we're seeing one in January. But the biggest thing is, how is the Fed going to react to that? So since we don't know how the Fed's going to react to it, that causes uncertainty in the market, especially your big time investors, your hedge funds, things like that, which kind of control the market. They're uncertain right now, so we're going to see a little bit of volatility. So as a result of that, we did see the Dow drop 350 points, as well as the S&P fell 0.6%, and the NASDAQ also slipped 0.4%. And some of them are starting to break below some of those key technical levels, right? We kind of talk about those moving averages. We've seen a few of them dip below that 50-day moving average. Now, if it does turn around, that could be a good buying opportunity. But if not, if it continues to fall, we could continue to see things moving in the negative, depending on what comes out and what the Fed is going to do about this higher than expected CPI report. So it's also not just stocks feeling the pain. Treasury yields are surging, with a 10-year Treasury yield jumping 4.65% as investors are looking, are in fear of actually higher for longer interest rates. Speaking of interest rates, the Fed Chair, Jerome Powell, just reiterated that the Fed isn't in a rush to cut rates. So this means traders are banking on rate cuts, or the traders that were banking on rate cuts in the next few months may need to adjust their expectations, right? So again, kind of talking about some of the things, the Fed is really using interest rates to control inflation. They have slowly been bringing down those interest rates, but if inflation continues to rise, they may change their mind. I know he talked about not being in a rush to cut interest rates this year, but that may actually make him go back to raising interest rates, which could mean some negative things in the market in terms of stocks going down. So what does that mean for your portfolio? Well, here's the deal. Higher inflation and delayed rate cuts create short-term market uncertainty, which typically leads to higher volatility. And we've kind of covered that through the beginning of this video. But again, the market does not like uncertainty. Anytime, people who kind of run the market, your big time investors, your big institutions, your hedge funds, when they're not certain of what's going on, that's going to make them not spend, not put more cash into the market, which could drive that volatility. We could see stocks coming down. And in the short term, again, we could see more downside pressure as investors digest the news. Again, it's not all doom and gloom. There are ways to navigate these conditions, whether you're a trader or a long-term investor. So what are some short-term strategies that you can use to kind of navigate this? And here's some things that you can do or kind of focus on. One, you can focus on defense stocks and sectors, so you can start to kind of look at some other sectors that may help you out. When the market gets choppy, defense sectors like customer staples, healthcare, utilities tend to outperform other stocks. So you can look at stocks like Procter and Gamble, Johnson and Johnson. They tend to do very well in uncertain times if you are looking for something to invest in or trade during this time. Also, you can watch for technical levels and buy smartly, looking for those dips or some bounces off of those technical levels. One of the things S&P is hovering around their key support levels. If we see a bounce off of that, that could be a good point for entering. Another thing you can do is use dollar cost averaging. So instead of going all in at once, if you do have cash, you can look to kind of dollar cost average over the next few months and kind of buy the same amount without just going all in. That can help you out with kind of spreading out some of your funds and buying no matter whether it's going down or going up. You also can consider short-term bonds, some cash assets. So with treasury yields rising, short-term bonds, money market funds, CDs are paying better returns than they have in years. So that can be some places to park your cash if you're looking for some short-term ideas. And then lastly, looking at ETFs and also some hedging strategies. If you're looking to hedge, you can look at ETFs like SQQQ or SPXS. Also, if you are into options, you can start looking at puts and cover calls. If you notice, we love cover calls. We love to hedge and also bring in cash on a regular basis using cover calls. Again, if you're looking for more on that, you can check the link below. So lastly, kind of as your final thoughts, inflation kind of surprised to the upside this month. Stocks took a hit. The Fed is holding rates firm, but with the right strategies, again, some of the things I just mentioned, you can definitely stay ahead of it. I'm always big on trading and investing off of the data, right? So don't go making any quick decisions. Don't pull everything out of the market. Really continue to study and understand what you're investing and trading in, right? If you understand the story, you understand what they're doing in terms of top line revenue. You're able to look at the charts and kind of identify where they are. Again, using some of those technicals that we talk about. We really like the moving averages, the 50-day, 200-day, as some ideas on levels of support, and also buying areas if they do hit those and bounce off. And also, as we go through, I'd like to know, what are your strategies in this market? Are you buying? Are you holding? Are you waiting it out? Again, drop your comments down below. We'd love to hear from you and what you think. Also, if this video gave you some help, some ideas on what to do in this market, give us a like, give us a follow. We'd love to see you on some of our upcoming content. Again, if you are looking for some coaching, hit that, look at that link below, and we'll see you on the next one. Have a good one.